Good morning. 2020 Form 4562, Depreciation and Amortization. Part 5, Listed Property. So the video is about how to complete Part 5, Listed Property. Listed property is usually properties that are meant for personal use, but you could use it in your business as well. So they include passenger vehicle under 6,000 pounds, entertainment devices like cameras, for instance, and laptops. So if you use a property that is considered a listed property in your business and you keep it in your business office, it's not a listed property. So you depreciate that property if you place in service in 2020 in the tax year you are filing, it will go in section B, part 3. But if you use it for personal, business, and investment, then it is a listed property. So Form 4562, Depreciation and Amortization, Part 5, line 26. So if you use the property that in the category of listed property for personal, investment, and business use, you must track how you use it, and you must track how many hours you use it during the year, how many hours you use it for business, how many hours you use it for investment, and how many hours you use it for personal purposes. And you will calculate the percentage for each one of the case, assuming how many hours you use it during the year is 100%. So it's the total. So for investment use, percentage is going to be the number of hours you use it for investment divided by the total numbers of hours used during the year. And the percentage used for business is going to be the number of hours you use it in your business divided by the total number of hours you use the property during the year. And the percentage for personal use is going to be the number of hours you use it for personal purposes divided by the total number of hours you use it during the year. So if the business use percentage is more than 50%, you could claim section 179 if qualified. You could claim special depreciation if qualified as well, depending on the property. And you could choose to depreciate the property using 200% decline balance under GDS, General Depreciation Service. So the basis for depreciation will be business use plus investment use, both percentage times the cost or the market value of the property, whichever is less. If the property was not purchased and placed in service during the same year, then you have to calculate the market value and compare that to the purchase price to choose the least amount. But if you purchase it during the year and start using it during the year for business, then the cost will be the cost for business, and you time that by the total percentage business and investment you use. So you use the percentage for business, you use the business use percentage to calculate if you use it for business more than 50% to see if you qualify for section 179, if the property qualify, if you could claim it, and to know what line you will put the information. So line 26 is for assets you use for more than 50% in your business. So the business use percentage is to figure out if you use a more than 50% for business. So to qualify for depreciation, 200%, section 179, and special depreciation depending on the property. So if 1 year, because you keep tracking the number of hours you use it, if 1 year your business use is 50% or less, you might have to enter a recapture in your income and pay tax on it. So you'll use form 4797 part 4 to calculate the recapture. So we will talk about that a little bit further down. But form 4562 part 5 line 26 is where you enter the property you use for more than 50% in your business. So you'll follow the column, so column A, type of property. You'll describe the property on line 26, date you place in service, business and investment use percentage, that's the total here, and the cost of other basis for column D, basis for depreciation, investment and business use only, the recovery period, and we talk about recovery period in other videos, the convention you choose to use, the depreciation deduction, and the convention is with the half year or mid quarter, and the recovery period could be 5 years or 7 years depending on what the asset is. If that's cars, is usually 5 years, I believe. And depreciation deduction, it will be the amount you want to claim. So you have column I for elected, section 179 for each one of the particular items that you wanted to claim. And line 25, special depreciation allowance for qualified listed property placed in service during the tax year and used more than 50% in a qualified business use. So you are going to claim special depreciation. The total will go on line 25. So that's how you'll complete line 25 and line 26. So form 4562, depreciation and amortization part 5 line 27 is for property that you use in your business 50% or less. So you cannot claim section 179. You cannot claim special depreciation on those assets that you use 50% or less in your business. You will depreciate it using straight line method under the general depreciation system, GDS. So you'll enter the description of the assets on line 27, and column B, date placed in service, column C, business use, business and investment use percentage, column D, cost or other basis, column E, basis. Keep in mind that column D, cost of basis, is for the assets, and column E is the basis for depreciation related to the percentage used for business and investments. But column D is the total amount, and column E is the portion of it. Column F is recovery period, and column G is the convention and a straight line method. So you are not given option, but you have option between GDS and ADS, I believe. So you are using GDS. You don't use ADS unless you are required. So GDS. And H, column H, depreciation deduction is the amount. You'll notice that section 179 is kind of shaded here. So you cannot claim section 179 for those assets that you use 50% or less in your business. And you follow the same method of recording by tracking the number of hours you use them as well. If we take an example like camera or laptop, for instance. So if you depreciate a property on line 26, which is for assets you use for more than 50% in your business, and later at some point another year you continue tracking the number of hours you are using it, and then you notice that you use it 50% or less in your business, you'll have a recapture to enter as the income. So how does that work? So you will pretty much, you'll have to go back to, if you are using depreciation spreadsheet, depreciation worksheet, PDF, you pretty much have to calculate for the number of hours that you depreciated the item, putting it online. You depreciate the item, and assuming that you depreciate it as use it for more than 50% in your business, and you claim section 179, you'll take the section 179 you claim, you'll take the special depreciation you took. If you use 200% declining balance or 150% declining balance under GDS, you'll take each one of the years you depreciate the item, you'll total all of the depreciation deduction took, including section 179 and special depreciation. You'll put it on one side. Now you'll use straight line method, and you will calculate what the depreciation deduction will have been if you have used straight line as depreciation method under GDS to depreciate the asset for the same number of years that you claim deduction on it already. You'll compare both numbers. So if the depreciation you took is more than the depreciation you will have taken using the straight line, the difference, it is a recapture. You will include that in your income, but you might be required to use form 4797 par 4 to calculate the recapture that will go on your business tax return as income. So that's one of the reasons that when I'm depreciating an asset, I like to use straight line. Those assets that could easily be a leased property, but that I use, I like to keep business assets as business. But not knowing what the future holds, if the business assets will be shared between personal or investment purposes, I like to depreciate it using straight line, and the depreciation will be lower for the first year compared to 200% declining balance or 150% declining balance, where you took a higher depreciation for the first few years before it turned into straight line for the remaining years. So I like to take straight line, and straight line is going to be a same depreciation rates except first and last year. And I don't claim section 179, and I elect not to claim special depreciation to avoid any risk of recapture. So if an asset in this instance is depreciated on your business tax return, is used 100%, and in later years you took it off service early, without having it for the full recovery period, there won't be a recapture to enter as income. But if you claim special depreciation and section 179 and you took it out of service early, well, you might have a recapture to enter back as income. And if you change how you are using it and you use a partial for personal, and it turns out that the percentage you are using it in your business is 50% or less, then in this case you won't have any recapture because you are using the straight line you have fell back on from the start, and you didn't take any section 179 or special depreciation. So that's something to keep in mind. But doing so, you will be depreciating the asset slowly. And claiming section 179, you could fully write off or expense the cost of the item without even have to depreciate it. The first year, you will have the option to fully expense it if you are using 100% in your business. But if you took it out early, then you will have a recapture. You don't recover, you don't use in your business for the full number of years that you're supposed to. Those assets, you claim section 179 and expense it in full the first year, you'll have a recapture to put back in your income. So keep that in mind. So let's go back to form 4562. So we know how to complete line 27. So line 28 is going to be the total of line 25, 26, and 27. And it'll go on line 21 of page 1. We discussed that in another video, pretty much how to complete form 4562 all the way down. We just want to focus our attention on a specific part of the form and discuss that a little bit, go further in it to understand it properly. So if you are using standard mileage for your car is a leased property, especially passenger car. So if you use standard mileage, you'll check line 24 and 24A and 24B of part 5, leased property. So you have yes and no question there to answer. And then you'll complete column A, B, C only for whichever of line 26 and 27 that apply. For the car, and that's pretty much it. You don't complete the rest of the listed property if that's for the car that you wanted to report here. And you'll just remember to complete section B, part 5, listed property, section B, and section C, depending on which one apply to your case. So section B will be automatically a part that you should complete if you are using your car for personal and business use and you are claiming standard mileage. It's good to track the mileage you use, the total mileage, the mileage you use for business, and the mileage you use for commuting and everything else, so that you can calculate the appropriate business mileage to record and claim the standard deduction on. So thank you so much for your time. We thank you very much, you all that subscribe to our channel. We thank you for all your comments. We thank you for listening to our podcast, and we thank you for reading our blog. We have an article, how to depreciate a business assets. We have articles under that category, and we have videos under the playlist 2020 Form 4562 about depreciation as well. If you want to learn more about how to depreciate an asset, and we have a free download session of on our blog inasop.com. No email is required. You don't need to join our email list to access our free downloads, where you'll find links to publication 946, Form 4562, the latest version, and instructions to Form 45, instruction for Form 4562 as well, and other forms, but they are under federal forms and instructions. So you're going to find links to click on and straight pull those forms from IRS websites. We do have our online stores, including liberdownload.com for our digital products, including templates, spreadsheets you could use to manage your finances and your business successfully. We have liberoutlet.com for resale products, liberdownload.com for liberlabel.com for custom apparels and stationery, and ninassoap.com for natural products, including soap and towels made out of natural fibers, soap made out of unrefined oils. Thank you so much for your time. I'm Afiavi Ojune, Liberman, creators of Liberman Consulting L.L.C YouTube channel, Liberman Consulting L.L.C podcast, and ninassoap.com, our blog.